Bitcoin just had its best run in 3 months. Money's pouring back into the Bitcoin ETFs, prices at a 1-month high, and the fear gauge still says people are scared. Nobody's cheering, there's no party. So what's actually going on? Well, the reason Bitcoin went up this week has got absolutely nothing to do with Bitcoin. So let's get into it. Welcome again, I'm Troy Harris, and today it's going to be Bitcoin front and center, then gold, then what's happening in the Aussie property market as well. About 10 minutes, so let's get stuck into it. Let's start with the scoreboard because context is everything here. Bitcoin, well, it started this year above 93,000 US dollars, but by the end of June, it had fallen to around about 60,000 US dollars, which was around about a 21 month low. Now, that was the bottom, or at least that's the bottom so far. I think we're going to potentially see some more pushing down in the coming months, but that's for later. This week, though, it pushed up through 66,700, and, you know, this is the first time really that it's been above that kind of 65, 66 mark for around about a month. So it's sitting around about that $60,000 to $64,000 mark as I'm speaking. But from the June low, that is a bounce of roughly 14-15% in about 3 weeks. So that's a pretty nice week and actually a really great fortnight. Now, the part nobody puts in the headline, it's all actually down. It's still actually down around about 45% on where it was this time last year, and still roughly about 50% below its record from October 2025. So yes, it is a good week. But we are a long way from where this thing was. Both of these facts are true at once, and you need to hold both to understand what happens next. So, this is what I am thinking. Here's the genuinely encouraging bit. And it's really the number that I'd be watching if I were watching one thing in particular. Now, that is the US spot Bitcoin ETFs have now had consecutive days of net inflows. Now, that's about 930 million, or it was a heck of a lot of money through the door, right? There was a lot of money, I think, come in on the Tuesday. It was somewhere around about 203 million on that day alone. Now, that's the longest and largest inflow streak since April. Now, why does that matter more than what the actual price of Bitcoin is? Well, because the ETF flows are the closest thing that we have to a read on what the big institutional money is actually doing, rather than what it actually just says on television, right? Because at the end of the day, the institutional money is really what talks here. Now, this is a genuine reversal, because remember, June was actually the worst month on record for these funds. Something like $4.5 billion US dollars, something like that, which was basically 10 straight sessions of outflows at one point. But, and this is the honest caveat, if we zoom out and those same ETFs, they are still down about $4.8 billion on the year. Now, 6 good days doesn't undo 6 bad months, of course. Obviously, I'm not saying that. But one analyst that I heard this week put it really well when he said this might just be selling pressure easing rather than institutions genuinely coming back. So we need to keep our eye on that as well. But the difference between these two things is actually quite enormous, and we won't actually know which of those things it is for weeks or maybe even months. Now, there's another reason for that jump, but it's a bit less romantic, shall we say. When Bitcoin broke through about $242 million of positions and forcibly closed in 24 hours, there was tons of money, right? Millions of dollars that people were betting that the price was going to fall. Now, when the price rises against those positions, all of those positions of people betting short, they get closed out automatically. And closing them means buying, which pushes the price up further, which closes even more of them. It's kind of like a domino effect, and this happens as the price goes up and as it goes down. So a decent chunk of this week's move, it wasn't actually fresh conviction. It was actually just people who were positioned the wrong way, right? Short-term traders, they were positioned the wrong way and they got forced out. Now, that's not a reason to dismiss the rally, but it is a reason not to mistake it for a stampede of new believers into Bitcoin. Now, here's the bit that made me sit up and really take notice. What actually drove this week? Well, something we call semiconductors, chip stocks. There was a big global rally in the chip makers across the US and across Asia as well. Investors got a little bit braver and Bitcoin kind of got dragged up with it. But what we really need to understand and know is that in the long term, Bitcoin will always beat to its own drum. Now, the thing is, there was no Bitcoin news, there was no halving, no giant adoption announcement, there was no protocol breakthrough. Bitcoin simply went up because Nvidia's neighbors went up as well. Now, sit with that for a second, because the asset that was sold to all of us as the escape hatch, right, from the traditional financial system, was an asset that we got told was uncorrelated, it was independent, it was your own money. Spent this week moving because of computer chip sentiment. Right now, Bitcoin is trading like a tech stock with kind of a shot of extra caffeine in it, if you want to put it that way. That's not a criticism. It's just that that's what the tape says at the moment. And if you own it, thinking that it kind of zigs when everyone else is zagging, well, this week is worth a proper think. But once again, if we zoom out and we look at things from a long-term perspective, it beats to its own drum. But if you're looking at things in a short term, there's always going to be these movements. So one thing that does support the long-term story, though, is the Japanese yen just hit its weakest level against the US dollar since 1986. Now, we're talking 40 years, right? That is a major world currency quietly losing its footing. And that kind of currency stress is exactly the argument for holding something with a fixed supply, Bitcoin, right? It's not driving this week's price, but it's the more interesting story underneath it. I want to share with you something around this whole quantum thing with Bitcoin, quantum computing, right? The spiciest story that I kind of found of this week, and it barely actually made mainstream news, was Galaxy Digital, Mike Novogratz's outfit, who obviously a lot of you guys may have heard of Mike Novogratz. He's a very big Bitcoin bull. If you haven't, you can search him up on Google and you'll find out. They put up $5 million to prepare Bitcoin for quantum computers. Now, this is grants for developers, a research arm, and an advisory council of actual quantum physicists. Here's the issue. Bitcoin security is built on a type of cryptography that a sufficiently powerful quantum computer could, in theory, crack. And the scary number, the researchers estimate around 6.9 million Bitcoin. Now, about $461 billion worth in current value could be potentially exposed if that day ever did arrive. Now, the most vulnerable coins, obviously, are the oldest ones. Wallets that haven't moved in over a decade. Those would be the ones that you would find quantum computing could potentially target first. But once again, we're talking potentials here, and none of this is reality. I'm just merely bringing up what's developing, and it's interesting to stay on top of. Now, everyone should take a deep breath, though, okay? Because no quantum computer on Earth can do anything like this today. It can't even go anywhere close to that. And the industry calls it Q-Day, obviously Q-Day for Quantum Day. And one research group puts the baseline estimate around 2033. So this is not a next Tuesday problem, but it's just something good to stay on top of. Two things made it urgent enough that people are writing checks, right? Obviously, first was back in March when a joint paper out of Google's quantum team and the Ethereum Foundation and Stanford suggested breaking Bitcoin's cryptography might need roughly 10 times fewer quantum resources than everyone previously assumed. So the goalposts have moved. Second, and this is, I guess you could say, the real problem if you want to put it that way, Bitcoin is deliberately, gloriously slow to change. Now, that is a feature. It's why it's trustworthy. A lot of people don't understand and really know that. That is why Bitcoin is so trustworthy. But it also means an upgrade of this size could take years to kind of move anything. So you can't really start that conversation in 2032. So that's why they're having that conversation now. So when you see headlines screaming that quantum computers are about to kill Bitcoin, no, that absolutely is not correct. Certainly not this year or the next, or really in the next couple. But the fact that serious money is now funding the fix is a story worth knowing about at least. And let's say you heard it here first, right? So just two more quick ones before we wrap things up. Washington, the Clarity Act, the big US crypto rules bill. It was jammed up over an ethics provision. And that disagreement got resolved in the last week or so. So it could now actually pass before the Senate breaks in August. So we'll keep you updated on that. So obviously it's not law yet. And I'll believe it when it's all signed, because, this has been carrying on for quite some time now, as everything in the government does. But some of this week's optimism is people betting that that bill does get through. And Russia is pushing legislation to legalize Bitcoin for international trade settlement. This is pretty big in itself. Now, this will be to work around sanctions, obviously, that the US have put on them, but domestic crypto payments stay banned. They're purely looking at this from an international perspective. So whatever you think of that, a nation state using Bitcoin as plumbing, and not just any nation state, a large nation state in Russia, to move value across borders is a genuinely new chapter for Bitcoin. Then there's the forecast war, which I love personally. Standard Chartered this week's reaffirmed $100,000 Bitcoin by the end of this year. They reconfirmed that that's what they believe will happen. My opinion is I don't believe it will. I still think we're going to be going through, because the 4-year cycle hasn't broke. But Citigroup has cut its target to 82,000 and expects zero net new money into these funds over the next 12 months. Meanwhile, the betting markets have it finishing somewhere around 70 to 75 by the end of the year. But once again, if you're holding this long term, you're holding Bitcoin long term, you shouldn't even be worried about any of those numbers. You want to be thinking, what's it going to be in the next few years, not by the end of this year. Same asset, same week, same data, a spread of nearly $20,000 between the so-called professionals, as we call it. We just named two big professionals there, and they're calling $20,000 difference. Just remember that next time somebody tells you where Bitcoin is definitely going, a lot of the time, even the professionals can't get it right. I want to quickly touch on gold before we wrap up, because the real story here isn't actually just gold. Bullion's sitting around that 4,100 an ounce level. Now, that's actually up for a third straight session, and it's highest since the 7th of July. That's Middle East tension doing the work, obviously, with all the stuff that's going on there again. Crude, I think, pushed above $85. So that's kind of all happening again with the Iran situation heating up again. But gold's just come off its worst quarter in 13 years, which is not a bad thing. I mean, it had a real move up there, and it's still roughly around 22% below its January record. So the actual story is silver, because silver's pushing $60 an ounce. Now, that's up 4.5%, and that happened in a single session. Now, it's been beating gold as far as movement really over the last week or two, and that's dropped the gold to silver ratio below actually about 70 now. So the number of ounces of silver it takes to buy 1 ounce of gold, but, when that ratio falls, it usually means that people want the metal that industry actually consumes, not just the one that sits in a vault. So silver's the one to keep an eye on, in my opinion. Looking at a home, Australian property is the mirror image of Bitcoin this week. Really, Bitcoin bounced, property kept sliding. The daily index, the 5-city aggregate, is down around, I think it's another 0.3% or something like that. Every major capital city in Australia fell except Perth. Homes for sale are running nearly 16% above this time last year. So supply keeps building while buyers are actually sitting on their hands. So June was actually the worst month for values of housing since December 2022, down 0.4% nationally. Over the June quarter, Sydney was down around that 3.2%, Melbourne down around 2.6%. But two things worth knowing, though: auction clearances bounced to 54%, 8%, The best in it was around about 7 or 8 years after 6 straight weeks, stuck under 50. So there's still a flicker of life there, and there's still a lot more going on nationally. The values may be looking here and there, but in the long term, there's Australian property. There's really nothing to worry about. This is a market cooling off, not a market collapsing. Those are different things. And as always, the headlines love to blur them, right? They always sensationalize these things. One stat that I did find fascinating was that sellers are quietly abandoning auctions. So the share of new listings going to auction actually dropped, which was interesting. Vendors stopped wanting a public result. That tells you how they think the public result is probably going to go, right? The week in one line is Bitcoin had its best run since April. It rallied on chip stocks, not on anything really to do with Bitcoin. Gold ticked up on Middle East fear, while silver quietly outran it, and the Australian property kept easing with the first flicker of life at the auction rooms. Next week's going to be a big one. We've got the US Federal Reserve. They meet on the 28th and 29th, and every asset I've just talked about will effectively probably move on that. And here in Australia, our RBA is back on the 11th of August. So enjoy it while it's quiet, right? Enjoy your next week. Your one action this week, I will say, and it costs you nothing. Open your notes app and write down 3 numbers as they stand today. Write down Bitcoin's price, gold's price, and the median price in the suburb that you care about the most. If you want to say it for Aussie property or whatever it is, date it, do it again in 3 months. I always look at these things in long term. I mean, anything less than 3 months is a complete waste of time, because in a year you're going to have something that almost nobody has, and that's your own record of what has actually happened, instead of a memory shaped by whichever headline shouted the loudest, right? It takes a minute or two, so make sure you go and do that now. The comment of the week: every week you say it's complicated, Troy. Yeah, well, that's because every week, mate, it is, right? If it were this simple, you wouldn't need me. You'd just need a calculator, all right? So subscribe. Make sure you hit the subscribe button, do all those things. Leave a comment. I'd love to talk back. Whatever questions you may have, I'll see you next week.